Welcome back. We'll now go straight for our interview segment to review the stocks. I have with me on the Skype Ambrose Omodion. Hello, Ambrose.
How are you doing? Thanks for having me today.
Great. It's been quite a long time now. Yes, Ambrose, how can you say the week went at the stock market exchange?
Yeah, I'll say that the market for this week also has been in a mixed trend, but that mixed trend has been in a downtrend actually, because the market tried to resist decline on Wednesday before it gave up yesterday again. To reverse again, it tried to gather on Tuesday and Wednesday. Yesterday it gave up the gain. Today we're expecting that the outcome of the MPC meeting will determine whether the market will bounce back, because there's a change of a change in the trading environment. Market are looking at, since there's a little adjustment in interest rate in Treasury bill, and also the outcome of MPC meeting will determine where the market will go going forward. But I see that many investors are sitting on the fence to see what's going to come out with the MPC. That is why for a while now I've seen a low volume traded on the exchange, because most of investors are trying. Let's see where the economy is going, and also what will be the policy that will drive or sustain what we have seen in the Q2 GDP. This is why the market is a bit dull now. But actually, in the month of September, being the last month of the last quarter for the third quarter, we expect that investors towards the end of the month will start positioning for Q3 earnings season. And for me, most investors will also be guided that this a huge illiquidity in the foreign exchange markets, that it might affect some companies' performance for Q3, because most of them that depend on imported raw material, their cost of importation will be high. That is why a good investor at this point now should also look away.
Now, let me ask, you said so much about how the MPC meeting is affecting the markets. Now, between the federal government and the state government recently, the issue of VAT, that's the value-added tax, it has been cropping up. And now things might change with law courts the court's rulings if it goes the ways of the state government. How would you think this will reflect on the market?
Actually, the VAT for now, for me, I don't see it impacting the market anyhow or immediately for now, because even the one that the federal government are collecting, I don't see how it's also affecting the market positively. But what we need that the collection should be a way of state or federal government to kind of develop the economy in terms of our structure, which is source of revenue for the government. But now, if the state are the one to collect for federal government, that should not be an issue for the market. Whoever that is collecting is for you to use it judiciously to develop or to impact the economy where you are. If the state are going to collect it, okay, let's see how the state goes, because look at also many states today that have been doing well. They have a good IGR as I speak. I will see any part of such IGR on their state. If the VAT issue is what will change their activities, fine. But I believe every Nigerian is one for true federalism. If that comes to be that state cannot control their resources and others, it's a good one. But for me, the federal government also has its own umbrella of how to look at what is happening in the state. But if because this area of tax VAT, yes, if they want to divide it, let's see how they can share it. They want how the state to be giving federal government from that. Yeah, it's a simple thing. Let them sit down together and fine-tune it and harmonize the whole thing. And that would not be a problem for me. That would not be a problem.
All right. Let's go back to the MPC meeting now and how it is affecting the stock market. The MPC meeting is the monetary the monetary meeting of the CBN that looks at the economy and looks at how things can actually go the right way. But some of these meetings, you will agree with me, are not actually bringing out positive signs or positive steps to bringing back the economy to its strong point. What do you say?
Actually, I disagree with you that I said it's not bringing out positive steps. If not the MPC meeting, the economy will not be where it is today, because they manage the economy every 2 months to look at to fine-tune their policies. I'm telling you, the monetary policy of this nation or the monetary have really tried to put our economy in the right direction. If the government, if the fiscal authority, because there are 2 authorities now, fiscal and monetary. Monetary has done the best, and we can see the impact on the economy. What we need now is more of fiscal to kind of cooperate and put things together to move forward. Actually, what we saw in GDP for Q2 is an improvement of what we saw in Q1. But we need to sustain that tempo. It's not a time for government of any level to celebrate or any minister to celebrate, but rather continuity will matter. You know, in this part of the world, in Nigeria, when we are making progress, we forget about looking at the policy that brought us there, whether we can fine-tune it or make it better. Now that we are seeing recovery that has been sustained this way because of the decision CBN took when we were in that economy, that is for 2020, we can see that the intervention in major critical sector of the economy is also reflecting on the GDP we saw. For me, it's a good thing in that direction. Rather, let us also sustain that tempo. And I believe that if CBN want to sustain that tempo, this is not the time for them to adjust rate at all. No rate will be adjusted. Interest rate should be left where it is to see more of a recovery before time. Because now that inflation for the past 5 months has also declined, let's watch the rate first, because inflation is around 17% now, while the rate remain around the monetary rate, that is MPR, remain around the 11.5%. It's still okay. Let's watch with time when we see re-improvement and regrowth, then we cannot think of adjustment. But for now, I will encourage that today the last of the year.
Ambrose, you're saying we should hold on to how the economy is right now, and the rates at which it is, the inflation rate at which it is, and the other rates at which it is. But going forward now, when do you think Nigeria can actually come out of its doldrum in the economic circle?
No, actually, I said the recovery we are is still a sustained one. That's why it's still slow, but we are recovering. What we saw in Q2 GDP after this, we are still on recovery. But I said the government should not change their policy. Rather, they should review it and improve on it so that we can sustain this recovery. This is not a time for them to adjust even the interest rate, the monetary policy rate. This is not a time. You need to watch because the economy is still just gathering momentum. Let it gather momentum to move forward, and you see regrowth before you can adjust your rate. For me,
what will make it gather momentum?
No, if you have a relatively low interest rate, it's enough for you to gather momentum because the cost of borrowing in Nigeria is not high. That's why when we're in recession, they brought the interest rate low so that they can encourage cheaper funds. But if you increase your rate today, that means you have increased cost of borrowing. People will now borrow less. But if it remains low and the cost of borrowing is low, people can have access to funds and also expand their business. But this is not a time for you to adjust any rate because if you adjust, you're going to close the recovery we are seeing. So people will run back to their shelves and the economy will start dragging feet again. Let's leave interest rate where it is now. If possible, let's adjust it down so that people have more cheaper funds to drive this economy. We must come out of this situation with a regrowth. When we see regrowth, the 5.01 is a growth, but it is not, for me, it's not too real until we get like around 6 points and we're already out of this period as from 2022. They will now say yes. We are comparing this year that is recovering to a negative or a down year 2021. That's 2020. That's why we are seeing like a 5% growth. But when we're able to maintain this growth in 2021, then when we are comparing it to 2022 economic activities, we cannot read whether we are in real growth or real recovery. For me, it's a good step we are seeing now. What government have done at the during the COVID-19 issue and all those recession, we are seeing that the impact is coming out gradually. Let them sustain it, and also it's not a time to adjust any of their rate. Even the interest rates to adjust down, not up now. Because if you adjust your MPR up, it's going to choke the growth we are seeing. But rather, you can make it more flexible, either adjust it down or you leave it where it is now so that people can have access to cheaper funds to run the economy. And also, the government also borrowing. Yeah, if government is borrowing and the cost of borrowing remain high, it's just going to affect the economy because it's going to move to government. That means the private sector will not have access to what? To keep a big fund again. Because if government is borrowing at a high rate, you see, everybody wants to put money in bond, want to put money in a treasury. But if government is borrowing at a low rate, it's going to also make funds available for the economic activities. Don't forget also that the cost of managing our debt is already high. For me, I would advise that the government should reduce their cost of their rate of borrowing in terms of not when I mean rate, the cost, the return. If, for example, they are going at let's say 5% before, they can reduce that to 3%. So that it will discourage kind of saying off on living for government activities, so that the economy will still have what to play around with. So that people have access to funds, and that fund will be run into other economic activities than government coming with a high rate to borrow, and government not kind of crowd out other investors, especially private sector in the economy. That is the only thing, because you want to balance it. Government need to balance their borrowing so that they won't crowd out the market with their work, with their high cost of borrowing. That's the only thing for now. But the economy, for me, we are recovering, and we are still in that part of recovering. It's good for us. That's why I said it's not a time for them to change any policy of any kind.